Hi everyone, welcome back to the channel. This video is a part of the portfolio update series made for those invested with me on Etoro. During September, the portfolio was down 8.25%, and for the year, we're at 3.53%. We are invested in KWeb, Paramount, Warner Bros. Discovery, Alibaba, Berkshire, Cardlytics, and Tencent. Despite improvements in the underlying businesses we are invested in, stock prices have gone lower as August and September tend to be seasonally weak months for equity investors. However, I'm expecting a bounce back in Q4. The media companies in our portfolio, Warner Bros. Discovery and Paramount, were facing the writers and actors strike. So far, the writers' strike has been resolved. Furthermore, the largest companies in the space, Netflix, Disney, Paramount, and Warner, have come together to form the Streaming Innovation Alliance to unite in their lobbying effort. What we're witnessing right now is the formation of an oligopoly in the streaming media space. The key players need to come together in order to differentiate their offering from their indirect competition. The formation of this alliance could also accelerate the trend towards consolidation within the industry. Warner Bros. Discovery has two primary drivers which will improve the business fundamentals. The first is their debt structure, which is mostly fixed at 4.6% with an average maturity of over 14 years. The company is benefiting from rising yields due to their low-rate fixed debt trading at a discount. Their second driver is the ability to generate cash flow through a combination of delivering mega hits like Barbie while optimizing the company's structure to lower costs. This is a combination of financial and operational leverage at play. This may not be very apparent right now, but by the end of 2024, when the company will most likely be able to reduce its debt down to the $35 to $37 billion range, investors will finally start to understand and appreciate the company's structure and likely be optimistic about how much cash this company will be able to generate. We could see a double in the stock price, and then analysts will be talking about the rosy future of the company because, as we know, narrative follows price. Paramount has more interesting near-term catalysts. Within the next few months, we will see a ramp in ad spend due to 2024 being an election year, and there will also be a boost from the Super Bowl. Back in August, Paramount sold off Simon & Schuster to KKR for $1.62 billion. Proceeds from this deal could be used to clear off debt till 2025 and give the management some breathing room in order to get the best possible deal for the overall company. A combination of the following factors: higher revenues from the linear business in 2024, lower spend on the DTC segment, more cash retained due to the dividend cut, and possible non-core asset sales are all reasons to be optimistic about Paramount. While all these short-term catalysts play out, we could always get the news that there is a buyout of the entire company. A buyout is a scenario that I believe Buffett and Byron Trott are trying to create for Paramount. It is really just a situation to wait and watch while the value of the underlying assets is unlocked. The same can be said about Alibaba, Tencent, KWeb, our investments in the China tech basket. The stock price of these companies are facing headwinds from the strong dollar and a gradual recovery in the Chinese economy. Fundamentally, on the basis of cash generation, Chinese tech companies offer tremendous value. I still believe that patience and long-term mindset will be eventually rewarded. With that, I hope you have a better insight as to how I'm viewing some of the holdings in our portfolio. If you have got any questions for me, please do share them in the comments. And if you'd like to connect on Twitter or on Instagram, you'll find links to those in the description below. Thanks for taking the time to watch the update, and take care.